Okay. Oh, and already? Okay. And away we go. Welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And please note, we are moving. Where? Noon on Saturdays, starting October 4th. So right now we're at 1 p.m., but in a couple of weeks we're going to be moving to noon.
We're moving to the prime spot.
Prime spot, exactly.
Prime
We got so
time.
popular, but prime time.
That's
We got
right.
so popular they moved us.
I knew.
Okay, so I'm your host, Edward Brown. I'm proud to have as my co-host, Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. And the vacations are free. Their only request, a $75 cleaning fee to cover those housekeeping expenses. Their website is lighthouseresortandmarina.com. You can reach them at 916-777-5511. Today's trivia theme is silent stars. So you have to go way back in time in the movies for silent stars. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show and television, Comcast Channel 26 and AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m. Today's special guest is Kelly Clemensen from Farmers Insurance.
Howdy, how's everyone?
Good. Excellent. Thank you for joining us. Now, I got to tell you, the reason that we have Kelly on, now, everyone knows that I'm an expert when it comes to life insurance and disability insurance. But when it comes to what they call property and casualty insurance, that's where I leave it to the big boys. And as it turns out, I had gotten in touch with Kelly because I have a building where I was just getting reamed with my insurance premium. So I did a little research and came across Kelly. And even though he's not from the San Francisco Bay Area, it didn't matter because we did this stuff, email and phone, and then decided, you know what, he's coming up here, so we're going to have him on because he saved me Uber money. That means lots.
Lots
Of
nice.
money.
All right.
So, Kelly, you're with Farmers.
Absolutely, yes.
That's a small
Yes.
company. I think I've heard of them before.
Yeah.
Thank
Dinky little carrier down in Southern California.
Yeah, yeah, only in Southern California. Yeah.
You're not the gecko guys, right?
No.
Those are the other guys.
Great commercial, along with the duck. Who's the duck? Affleck?
That's
Yes.
right.
Affleck, yeah, that's right, exactly. So now, you helped me specifically with my building, which is kind of ridiculous how much money you saved me, on that. But the average person, they don't own buildings, but they own their car and their house and all that.
Absolutely.
So we're hoping to give us a little advice. What is people kind of, I think they've heard the term bundling.
Yes,
Explain
it's
a bit about that.
bundling. Insurance carriers like to have the complete package, and if they can do that, they feel like they have a better chance of protecting you properly. And also, since they have the whole package, they tend to like to give out discounts for being loyal, like loyalty, like anybody does.
Okay.
So they're willing to give out some discounts in that way.
Okay, so what is the bundling? What is that?
Bundling just, it kind of mounts. As you put one policy with an insurance carrier, once you put on another policy, they give you a discount for the first one, and they usually go both ways. Your auto home discount, and also with Farmers at least, they also give a discount for having your commercial policy with us as well. So the discount goes all ways. I don't know, how would you explain that, but yes.
Okay, but basically,
back and forth.
more than just doing the car.
Yeah, exactly.
All right.
So Kelly, we were joking a little bit about the gecko and some of the other guys out there. So obviously there's like the big 4 or 5, and we see all their commercials. A lot of competition. What is Farmers? What's like their claim to fame? Or I mean, you're obviously a dedicated Farmers agent, and I have Farmers insurance. I mean, on my homeowners, auto, and rental property, and again, I take advantage of that bundling, which is absolutely great.
Right.
But Farmers, in general, what's your what's the takeaway from Farmers versus some of the other big guys that you're competing against?
Well, Farmers is a large carrier, as we mentioned before, but they tend to like to carry your coverage so that you'll be protected. And in particular, when the assets start to mount, when you get to be a little bit older and you have things, you need to protect them from what goes on in everyday life.
Boats,
Yes.
motorcycles,
Yes, all those things.
snowmobiles.
Absolutely. Yes. Aircraft and moonmobiles or whatever you have. I don't think we have discount on
Spacecraft.
mobiles, but yeah.
But then Mark was mentioning also about umbrella. Now,
Right.
my umbrella only costs $20, so I get a new one every time it breaks. But we're not talking about that kind of umbrella, are we?
Protects you from different types of rainstorms, yeah.
Yeah.
Umbrella insurance extends over the package and just brings you more protection over your whole portfolio. So umbrella insurance it's relatively cheap because the likelihood of it getting there is somewhat small. But on those large claims, you're really happy you have one because it does extend over and above the limits you carry in your underlying insurance.
So what's a typical umbrella? So I know that a lot of underlying policies, it's common for them to have like $1 million limit or maybe a $1 million limit with $2 million aggregate in a year for claims. The umbrellas on top of that, and what are you finding is some of the more common umbrellas that your clients are buying?
We do umbrellas all the way up to $5 million at times. I've got a couple that are on clients that have significant assets and they're looking to protect those up to $5 million umbrellas. The way things are, it's not unusual to have. Well, let me rephrase that. It is unusual, but it's not out of the question to have claims like that.
So basically, it's like on the auto, you have typically what 300,000 is usually the.
That's the most typical one.
That's the most typical one.
Yes.
So if you get into a car accident and you cause more than $300,000 of damage to somebody,
life and limb.
Yes.
Is that generally the idea?
That's the idea. Yes. Right, and then you have an attorney after you.
Yeah.
So
Really,
to avoid that, and attorneys are great, they're just protecting people, but to avoid that coming out of your pocket as opposed to the insurance company's pocket, which they have a lot deeper ones than most people have, that umbrella that's where it comes into play. As the umbrella picks it up after that.
Yeah, but if you hit somebody accidentally and cause great bodily injury, it's going to cost more than $300,000, and so
yes,
I'm trying to think of like if any insurance on your car covers like $1 million, but usually it's only about $300,000, isn't it?
There's limits available higher than that, but that's the typical one that most people carry. You'd be surprised how often that turns up, because that's what lease limits are required. A lot of people carry that. They figure lease companies are enough. So.
Does an umbrella policy just extend your existing coverage, or is there additional like bonus coverages that are an umbrella policy?
Yeah, they do cover what's called gray area coverages. Now, if I could explain what the gray area would be, then it wouldn't be gray. So something that comes up that's not particularly excluded underneath your on your underlying policy, then the umbrella can pick that up and pay for it.
Yeah, they cover acts of God.
I don't know if we do that or not. I'm not sure about that one. I don't believe so. No, they don't. They don't cover those type of things.
Now they're excluding terrorism and war and all that.
They do. Yes. Yeah.
Give us a little bit about before we cut to commercial break about the deductibles. What do you typically like to see? What have you found has been a good cost-effective?
Myself, as an insurance agent, I carry higher deductibles.
Yeah.
Because I just feel like giving money to the insurance companies for lower deductibles are causing more premium to go to them and more premium out of your pocket. Now, if you want lower deductibles, that's up to you. But my idea is that the higher limits you carry on the bodily injury or in commercial, the higher limit you can carry on the commercial on the aggregate limits and on the per person or the per occurrence limit, the higher you can get that, the better off you are, because the deductible, that's manageable. If you carry a $5,000 deductible instead of a $1,000 deductible, $4,000 is not peanuts, but it's manageable.
Yeah,
and you pick a higher liability limit.
You'll save a lot of money
yes.
on the premiums. Tell you what, we're going to cut to a quick little commercial break here. Now, before we do, last week we had a special trivia contest where the winner was going to get a 2-night stay at the beautiful Hyatt Regency Santa Clara. So, located steps from the new Levi Stadium, the Hyatt Regency Santa Clara has over 60,000 square feet of meeting and reception space. In addition to over 500 luxury guest rooms, the Hyatt Regency Santa Clara features a variety of food and beverage outlets. Nestled conveniently in the high-tech capital near Great America Theme Park, Shoreline Amphitheater, HP Pavilion, and Stanford University, the hotel offers 1 gigabyte internet connection. For more information, visit santaclara.hyatt.com or call 408-200-1234. So here is the question last week. Almost 1/3 of women said they have no problem doing this in public. What? And that's kind of a scary question. The answer was, wear a bathing suit. And our winner was Olivia in San Jose. Congratulations, Olivia. And let's see here. Okay, we were going to.
That's a good one.
That's a good one. We're going to cut to our first commercial break, and the theme again is Silent Stars. He was called the Man of 1,000 Faces. Who was he? All right. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. He was called the Man of 1,000 Faces. Who was he? 888-912-1190. We'll be right back. Okay.
Boris Karloff?
Well, you can answer that on the air. I'm glad you didn't answer it now because we don't want to give away the answer.
I don't know.
Okay.
Could be right. That might be it.
Don't say anything.
Lips are sealed.
Too many times Mr. Kramer's too smart. He answers everything correctly. Okay.
Jeopardy finalist.
Yes.
Jeopardy master.
Having fun so far?
Yeah, this is cool.
What else? What should we be covering? We talked umbrellas. We talked.
You can make insurance exciting. You're doing pretty good.
Talked
Yeah,
gecko.
we're trying. We're trying to.
What else?
I guess maybe cover a little bit about like comprehensive versus collision.
Sure. Okay.
Because people hear the terms, but they don't know it.
Get into a little bit of auto insurance, yes.
Yeah, because most people have auto
We can talk a
insurance.
little bit about that. There's some
Okay.
there's some additions there that are not real well known and very helpful.
Yeah,
Yeah.
because they've the medical
They're not
part.
expensive.
Okay. Yeah, uninsured motorists, stuff like that. Okay. All right. So we get this one here. Okay. Well, welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question about silent stars. All right. He was called the Man of 1,000 Faces. Who was he? Kelly.
My guess is Boris Karloff.
No.
Bad guess.
Lon Chaney Sr.
Oh,
Remember that? He
Chaney.
did Phantom of the Opera and all that fun stuff?
Not junior, but senior.
That's right, senior. Gotta go back to the silent time. Just real quickly, too, this is our last chance. San Jose Sharks hockey is coming to town. I'm trying to do Jaws, can't do it. Don't miss your chance to experience NHL hockey when the Sharks battle the Canucks in preseason action on September 23rd, live at Stockton Arena. Get your tickets now at Stockton Arena box office or at all Ticketmaster outlets. Stockton is Sharks territory. I didn't even know they had a arena there. Okay, now that we are in the studio here, we have the pleasure of having Kelly Clemensen, who's a farmer's agent, and he's educating us about auto insurance and all kinds of things. Can you get into the specifics about like comprehensive and uninsured? Because a lot of people we hear these terms, but let's get the definition from the expert.
Comprehensive, collision, all these various auto policy traits that some of us don't really quite understand why we're paying for those.
That's right. Give us some advice.
Comprehensive insurance is described as everything except for collision. So examples, taking a key and scratching your paint, rock through the windshield, your car gets stolen, running into an animal, strangely enough, is comprehensive.
Really?
So those types of things
Wait,
are...
hold on.
Yes.
So I'm driving my car and I hit Bambi.
Right, that's right.
That is comprehensive?
Yes.
Even though it happened during an accident?
Right.
While the car was moving?
Yes. Amazingly enough.
Really?
And the other thing is if a package falls off of a truck, comes in front of your car, and the package is still moving, that's considered comprehensive as well.
If it's not moving?
If it's not moving, then you hit it and it's collision.
Yes.
That's right.
Oh, interesting.
Comprehensive, generally speaking, doesn't go against your premiums, whereas collision does. If you have a collision and it's your fault, that's going to cause your premiums to go up, more than likely.
Now, do you have to have both?
No, you don't. Now, if you have a financial institution that's insuring your car, or you're making payments to, then they're going to want to have both. But if you don't have that, you don't have to have both.
And does the insurance? Let's say I buy a car, and I have a loan on it, so they're going to require me to have insurance.
Yes.
Can I choose the deductible?
Yes, with most companies you can, and you can
Okay.
choose a higher one. Because
Right.
generally speaking, insurance companies guarantee a deductible to the financial institution that's different than what yours is.
Okay, and usually they'll make you take out the high limits, 300,000 or whatever.
If your car's leased, yes, they'll do
Okay.
that.
Now, in some
Right.
cases, like when I bought a car for all cash, because I don't buy super expensive cars, I totally didn't even get collision.
It's not a bad idea.
Yeah,
It's
I mean,
if you can
you
carry
know.
higher liability limits, I'm a firm believer that's the most important place
That's
to carry coverage.
exactly. That was my whole idea. Is that if I do something stupid in my own car, that's my own fault, and I should pay for it. If someone else hits me, that's their fault. But now, a lot of times, there are people running around out there without insurance, and so what do we have for that?
We have uninsured motorist coverage for that. Not only for injuries to yourself, but also damage to your car as well.
So where does the medical part come in? Because there's also medical on top of that.
Right. And medical payments are confusing. They can be, a lot of people consider that's what's going to pay for the person in the other car. Medical payments, that's not what they're for. Medical payments are for people in your car, mainly family members. So your bodily injury limit covers for injuries in the other car. The medical payments cover for your injuries in your car.
It doesn't matter who's at fault?
Medical payments, no. It's a no-fault coverage.
Okay.
What about earthquake? Does Farmers provide earthquake, or do you have to get that from?
Only if it happens on a Tuesday and it's raining. No, I'm just kidding. Go ahead.
Actually, Tuesday, very late. No, actually, Farmers does not provide it in and of themselves. There's a company that came into existence when the Northridge quake happened in '95. It's called California
94.
Earthquake Authority, '94.
94,
Yes.
I remember. Because it happened on my birthday.
Ah,
Yeah.
okay. So that bred a new insurance company they call the California Earthquake Authority.
You know what? And the thing is, it's like a $25,000 deductible.
Huge
and
deductibles,
Yeah,
yes.
and
Yes.
it's like, and the premiums are so much. You look and you go, I don't know if it's worth it.
Depending on where it is, the premiums can vary drastically based on where you're at. Yes, that's right.
Speaking of premiums, my experience is that insurance premiums as a rate per like 100 or 1,000 of coverage they tend to go up and down year to year depending on God only knows what claims experiences,
Claims, yes.
storms, etc. How are rates now?
In particular, if you're in an area that's a fire hazard right now, the rates have gone up pretty significantly. The insurance companies have lost significant amounts of money on homes where there's brush areas, and you'll see that those rates have changed. I'm not talking anything new to those that live in those areas. They've already gotten them.
Because we live in an area where the fire marshal specifically comes and kind of tells you, hey, this is what's happening. This is what you do. Get rid of this stuff 10 feet below and 25 feet around your area.
Most people have gotten fire department surcharges for living in areas that are brush areas.
Yeah.
And insurance companies have followed suit because they've lost a lot of money in those.
But aside from that, are insurance rates down or up year over year for the average insurer?
Occasionally they go down, but it's not very often. Generally speaking, they go up because the cost of repairing vehicles almost never goes down. Your car might get older, but the parts on it to replace it, generally speaking, they go up, and the labor usually goes up.
That's a good point. So even if you have a 1974 Pinto, well, actually, the parts trying to find parts of that would be very expensive.
Good luck.
Yeah, really. But the labor part of it, you're right. That part doesn't
Doesn't
really
change. No.
Wow.
Awesome.
Any other advice you want to give us?
Well, there's some minor coverages on auto insurance that's really nice to have. Uninsured motorist property damage.
Yeah.
That's a coverage that pays for your car in case an uninsured motorist hits you and damages your car. But even if you don't carry coverage for the car itself, you can get some coverage with that coverage as well. Glass deductible buyback's nice to have. Most insurance companies will fix the little pits that you get from the trucks that kick rocks up on your windshield.
Oh, interesting. Okay,
Yes,
so
they'll fix those. Most companies will fix those for free.
really
If you carry the glass deductible buyback, they'll fix those
glass
for free.
deductible buyback. Okay,
Right.
because ordinarily that would be like a comprehensive potential
Right,
situation.
yes.
But if you don't have enough.
If your deductible's too high
Yeah,
for your
yeah,
windshield,
exactly,
then
yeah.
you're fixing it yourself.
Because
Right.
windshields generally are not that expensive anymore.
And again, that's one that doesn't raise your insurance premiums, at least with Farmers it doesn't.
Oh, that's neat.
I like that. So again, I had Kelly on here because I just was flabbergasted as to how much he was able to save me on insurance on a building I own. It was incredible.
How much of your business is commercial versus residential?
Right now, I've been concentrating on the commercial part, simply because I found a way of contacting folks like Edward. and that hasn't been easy with the type of coverage he has. But I found a way to do that, and it's gone actually very well. So it makes it so I can come up to Northern California and enjoy your wonderful weather up here, as opposed to the 100-degree heat down south.
Well, what happened was, I got this postcard, and I was thinking, okay, well, of course I've heard of farmers, but I gotta just call the guy just to see if it's really gonna, if he really can help me. And then, sure enough, he got back to me and said, "Yep, this is what we can do." I said, "Are you serious?" I go, really? Cross your heart, really? And he said, "Yeah." And so I wrote a check out to the Kelly Clemensen Fiji Island Fund. No, I'm just kidding. No, I just wrote it out to farmers, and sure enough, we're covered. So Kelly, if the audience wants to get a hold of you, because what you did for me, maybe you can do for them.
I'd love to. I'd love to.
How do you get a
Sure.
hold of you?
A couple different ways. I have an 800 number. That's 800-350-4635. Love to try to help. If you like to deal with email, I'm on the email every day. So if you want to get a hold of me that way, the email address is kclemensen@farmersagent.com. My name is spelled with all these CLEMENSEN. And yeah, we'd love to help you that way as well. We can do almost everything by email and phone. If you want to sit down together, that's fine with me as well. But if you want to do things over the phone and email, we can certainly
Like I said,
accomplish
you were the real deal. That's why I had you on, because you really did help me. Okay, Kelly Clemensen, thank you very much for joining us. Stick around if you want to kind of hear about some real estate
Sure,
stuff.
love
Mark's got some really interesting things here. Okay, tell you what, we're going to cut to our second commercial break here. The theme is Silent Stars. Before Errol Flynn, which, by the way, people say I look like Errol Flynn. So I've also been told I look like Robin Williams prior to him passing. But before Errol Flynn, he was synonymous with sword fighting roles such as the Thief of Baghdad and the Mark of Zorro. Who was he? The first three callers with the correct answer are going to win that free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Before Errol Flynn, he was synonymous with sword fighting roles such as the Thief of Baghdad and the Mark of Zorro. Who was he? Please make sure to include your name and your email address. Speak slowly, spell out your email one letter at a time, and don't touch that dial, because the best of investing will be right back.
Clue on that one.
Me neither. 2 years ago.
But at least you'll, But the nice thing about it is at least you'll have heard about it. You may not know the answer, but you'll have heard.
Once you get the answer, it's, oh yeah.
Yeah, exactly. Which is really good, because that's the sort of thing I want people. That's why the average listener stays with us for half an hour, which is like 6 times the average. Because I think people do that. They go, I know it, but and then they don't want to channel surf. Isn't that right, Mr. Kramer?
That's right. When you're going to ask who was the lover boy,
Adam Sandler?
that's not in there.
Who's the water?
Who's the lover boy?
Valentino.
Water boy.
Water boy.
That's Valentino.
I thought that was Adam Sandler.
Wasn't it?
Was the water?
Adam Sandler.
Yeah.
Rudolph Valentino?
I think so.
Rudolph. He was the water boy?
No, water boy. Lover boy.
Oh, lover boy. Yeah. I thought you said the water boy.
Valentino, yeah.
Who's the lover boy?
Lover boy.
Everybody's working for the weekend.
You really should stop by the store and buy your wife some flowers. She'll be shocked, amazed, and love you.
What if I buy her flowers?
Yes.
The wilting kind?
Only you can do that.
Yeah.
Preferably pre-wilted, right?
He wilting. Yeah. All right.
Cool.
Okay.
Email time or what?
Yeah. Email here. And so, if you wanted to ask him a question while he's, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff, president of Pacific Private Money, California's fastest growing private lender. And when we cut to the first commercial break, we asked this trivia question about old movie Silent Stars. Before Errol Flynn, he was synonymous with sword fighting roles such as the Thief of Baghdad and the Mark of Zorro.
You've stumped the co-hosts.
Uh-oh. Douglas Fairbanks Sr.
Of course.
Okay.
I'm just not old enough to know that.
You never saw any of these old
No, I
movies?
feel young.
Buster Keaton and all that?
No, not really.
Okay. All right. Well, the last one goes back to 1620. No, just kidding.
Little Rascals, they used to.
Yeah, that's true.
That was black and white.
Yes, I enjoyed that very much. Okay, so Mark, first of all, we got an email here from a listener that says, if I only want to invest in your fund for a short time, say a year, does it still make sense to invest?
Okay, a little background for anybody who's listening for the first time to The Best of Investing. I'm Mark Hoff. I'm a broker and president of a company called Pacific Private Money. We're located here in the Bay Area, and we provide. We have two clients. We provide privately funded real estate loans for real estate investors and consumers. Basically, we are a non-bank source of real estate financing, and the money we use to finance those loans all comes from private individuals. Many of them living right here in the Bay Area. In fact, the vast majority of our investors are Bay Area residents. And so one of the investment programs that we have for Bay Area residents is our mortgage pool fund. We call it the Pacific Private Money Fund. And we launched it in 2013 in response to the fact that we had too many people calling our company and wanting to invest in the notes that we originate. And we originate fairly conservative loans. We don't do 80% bank financing. We're generally 70% or less. In fact, a lot of the loans we make are 40, 50, 60% loan to value. Again, these are oftentimes short-term, fast loans that the borrower needs money for a certain situation that's come up, and the banks just aren't able to respond in time. So there's a strong demand for hassle-free, non-FICO-based, non-bank financing, and it's a very quickly growing market. We founded the company in 2008. We've done over 750 loans, totaling over 175 million, with only 2 foreclosures in all that time. So that gives you a little bit of an outlook on the safety of the type of loans, or at least the security, certainly, of the loans that we've been making. And so we've got a lot of very, very happy investors who've made a lot of money over the years. 8% or more is the typical return that our investors have been receiving on their investment funds. And so when we launched the Mortgage Pool Fund, it was a way for the average person who's not a sophisticated note investor to be able to take advantage of the strong demand for private money, which used to be called hard money. It's still called hard money in some circles, but really it's a private money loan. And the market rate for private money loans in the Bay Area right now is anywhere from 9, 10, sometimes even 11% for, again, generally a short-term loan. It's not intended to be long-term financing, and people need it for any number of reasons, which we've elaborated over the years on this show in great detail. So the question was, for those who want to invest in our fund, if I only keep it, is it worthwhile to invest in the fund even if I only keep the money in for a year? Well, what's behind that question is that we have a 2-year minimum request for people to invest in the funds. It's designed to be a no-load fund, meaning there's no fees to you to invest in the fund, and there's no fees for you to take your money out of the fund if you keep it in for a minimum 2-year period. So no load, no fees. However, and we designed it that way, by the way, because we don't want people to treat it like a money market account. We have a real business model. We make loans. We don't want people to put money in and take it out in a few months. It's not a parking place for money. It's an investment strategy for people who are looking to boost the yields that they earn on their savings and retirement accounts. So what happens if you pull your money out early? Well, we do have an early redemption fee, but it's not punitive. So in other words, it doesn't take away, or it's not designed to take away all of the earnings that you would have made in that period. So, for example, we have a scaled or a stepped prepayment penalty. So within the first 6 months, if something happens, you got to take your money out. It's a 5% fee. That fee goes into the funds. The shareholders, the members of the fund, they benefit from that. We don't personally, the brokerage or myself, we don't personally benefit from the early withdrawal fees. The next 6 months, months 7 through 12, it would be a 4% redemption fee. Month 13 through 18, it would be a 3% redemption fee. And then in the final 6 months, if you got to take it out just before 2 years, it's only a 2% redemption.
Okay, so when someone says that they invest for a short time, say a year, so let's call it a year and a day.
Yeah.
Then the
That's
prepayment is 3%, but right now you're paying over 8%.
A little over 8%. So if you are a growth investor and are growth investors who are not taking distributions, are getting about 8.5% right now. So after 1 year, if you pulled out, that 2% charge would come off that 8.5%. The 3% charge would come off the 8.5%. So your net
5.5%. Okay, so if you look at a conservative investment, to earn 5.5% net, because there's no fees, and that's even after the prepayment penalty, that's much gooder than the bank, as they say.
Well, like I said, it's not designed to be punitive, and so it's just we designed it so that people would have an incentive to keep their money in. But again, we don't want stuff happens, and I know that there are some people who have invested with us who are active real estate investors, but weren't finding what they were looking for, so decided, well, I'm going to invest in Pacific's fund, but if something comes up that's too good to turn away, I'm going to go ahead and pull the money out.
Sure.
In fact, they haven't done it yet, but I happen to know that one particular investor who's an active real estate investor, I'll get the call one of these days to say, hey, I got to pull my $100,000 out.
So in a sense, from his standpoint, it is kind of parking the money.
Yeah.
But he's parking it only for a short time. Right? Not bad, not bad.
So for more information, for those of you who want to find out more about how a mortgage pool fund works, and more specifically how the Pacific Private Money Fund works, we have a website specifically for the fund. It's on the web at pacificmoneyfund.com. Of course, all one word, pacificmoneyfund.com. And when you're there, you can get a bunch of information. You can also sign up with a very simple name and email address, and we'll shoot you some information. We're more on the attraction side than the heavy promotion side, because we do understand that you do need to diversify your investments, and you need to study these investments, but we have a lot of very, very satisfied investors right now. And so also you can call us and leave us a message on the phone over the weekend, and we'll shoot you some information by email or return your call. And the number there is 415-883-2150. That's 415-883-2150.
Very good. And before we cut to our last commercial break here, next week we're going to have another special trivia contest. The winner's going to get an overnight stay at the Meritage in Napa. So how about a romantic getaway right here in Napa Valley? The Meritage Resort and Spa boasts world-class luxury. Enjoy award-winning cuisine, relax in the estate cave as you pamper yourself at the Spa Terra, or savor flights of Trinitas, that's how you pronounce that, Trinitas Cellars Wine. Meet your friends in Crush Ultra Lounge with, get this, 6 bowling lanes and sports entertainment.
Oh,
I'm there. Okay, if it's got bowling lanes, I am there. So you can make your reservations now for special winemaker dinners, the holidays, and masters and makers at Meritage. Visit meritageresort.com for details. Check that place out, because I saw the pictures and they look fantabulous. All right? Now we're going to cut to our third and final commercial break. Here's the trivia question. When we come back, I'm going to two things. One, I wrote an article that I got published that a lot of people don't know where it is, and if you email Edward at bestofinvesting.com, I will, for free, email you this article. It's about analyzing real estate with all kinds of sophisticated, fancy stuff, which I think the audience will appreciate. And then our co-host Mark Hahn has a book coming out. We'll let you tell the audience about that too.
Indeed.
So here's our third final trivia question. Again, the theme is silent stars. Which silent star actress was called America's Sweetheart and the Girl with the Curls? The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which silent star actress was called America's Sweetheart and the Girl with Curls? Don't touch that dial. The Best of Investing will be right back.
Shirley Temple Brown. Or Black.
Wait,
No, wait.
You guys said it right at the right time, at the same time.
Shirley Temple.
Shirley.
Was she a silent star, or was she in the talkies?
Talkies.
Oh, yeah, she was a talkie.
I think she was a talkie. Wasn't
She was a talkie.
Yeah. That's the first one that came into my mind, too.
Maybe we're wrong.
As soon as you said the girl with curls, Shirley Temple.
Well, maybe we're
Kelly, don't believe a word about his bowling. Last time I was with Edward, he bowled 98.
Yeah, but that was for 3 frames. Actually, the last time I went bowling was just a couple weeks ago.
Let's hear it.
Oh, it was awful.
What was it?
280. No,
Yeah.
no. I mean, it was really bad. I got all kinds of great excuses, but I just bowled poorly.
299.
It was the shoes. The last guy.
No,
did the
no. I
shoes,
still have the same shoes I had since I was 18 years old.
Okay.
Seriously. I think that's because you don't wear them out except for on the bowling lane. All right, let me see how much time we have here. 10.
Does the people that usually get for the mortgage thing that you're talking about, is that somebody that has problems with credits, things have mounted on them, and
Historically, yes, but more often than not now, it's just timing.
Why don't you ask that on the air?
okay.
Let's see, that would
It's a great question. We don't talk about it enough because the presumption about hard money / private money is that's what people have.
Can I ask about your bowling average on there?
I can't tell you how many loans
bowling
we
average or
have
my
FICO
last
scores.
bowling?
Both.
So obviously it's not that.
Not this
It's
time.
nowhere.
I won't do
Let
it.
me bowl again, and then we can.
Okay, we'll talk about it.
Yeah.
Thanks, buddy.
But the time before that, I did very well.
What'd you do?
What's how much time we have?
2:35.
10 what?
We have 9 minutes and 51 seconds. Good. Here we go. Welcome back to the Best of Investing. Last time, I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. Here is the third final trivia question. The theme is Silent Stars. Which silent actress was called America's Sweetheart and the girl with the curls? In unison.
Shirley Temple.
Wrong.
Wrong.
I know you're wrong because she's in the top.
Wrong again.
She's in the talkies,
Yeah,
exactly.
It's not silent film star.
Mary Pickford.
Yeah,
the
see,
girls,
again,
all
I'll
the
tell you,
girls
I'm too
that-
young for these questions.
We're 0 for 3, I think.
That's right.
0 for 3, that's right.
Not bad, not bad at all.
We're not going on vacation.
No.
Okay, so for
We're not at
yeah,
Senior Resort.
so first of all, I was telling the audience when we cut to the break that I wrote this article that talked about analyzing real estate and has to do with expense ratios and cap rates and all kinds of debt service coverage ratio, and actually I got some compliments on it. People thought it was pretty good. So what I'm going to do is, if anybody wants to email me, edward@bestofinvesting.com, and just say, please email me the article, I would be delighted to forward that to you. And but Mark, before we get into the book that you wrote, off air, Kelly asked a question. I think it's good to ask on the air.
Sure. The types of mortgages that Mark was talking about, I was just wondering if those are mainly directed towards folks that have had unfortunate things happen on their credit.
Well, you'd think so because, again, when most people think of hard money or private money loans, they think, oh, yeah, those are seconds we make to people with bad credit, or not even necessarily seconds, just a loan to someone with bad credit. I can't tell you how many people we make loans to with 800 credit scores, high 700 credit scores. So clearly, it's no longer necessarily loans to people with bad credit. Now, we do get loan applications from people who can't get bank financing because on their credit, which might not necessarily be bad, by the way, I can tell you that I see credit reports every day that with scores in the 700s, but they can't get a bank loan because 4 years ago or 5 years ago, they had a short sale, a loan mod, or a foreclosure, which now their credit score has recovered. But as far as the bank's concerned, 7 years haven't gone by yet.
Yeah.
So we're not able to make you that loan.
I talked to my banker. Now, I had not been in that situation, but I asked him. I said, I've heard this, that, if somebody's trying to negotiate the principal on their loan, on their house, or any other loan, that you guys are just turning them away. He says, yeah. He says, doesn't matter what their credit score is. Because the way they look at it is, if you did it to us once, you're going to do it to us again.
Well, and that's exactly right. And so that's one example. But the other example has nothing to do with credit or income or how they look on paper, but it has to do with speed. Now, in this market we're in, and we've been in this market now for a couple of years, where there's a lack of inventory. And so the way a lot of people make offers on a home that they really, really, really want to get, whether it's to move in for themselves or for investment purposes, is oftentimes the offer will be very aggressive in terms of maybe it'll be an all-cash offer, a no contingency offer, and even a quick close offer, where it's not as common now for there to be a 30-day or even 45-day escrow. It's not unusual for there
Or
to be
contingency.
or contingencies, right? Oftentimes, in order for you to get in the front of the line to get that property, you have to have basically a no contingency, all cash close in 14 or 21 days. Now, what happens if you actually don't have all that cash? And I will tell you that there are people making offers on real estate every day that say all cash, but they don't really have all cash. They intend to go to a company like Pacific Private Money and get a fast, no hassle private money / hard money loan to close that transaction.
Yeah, because from the seller, so from the seller standpoint, it's all cash, right? Because there's no regular bank in loan.
Well, it used to be, right, and it used to be back in the day when we were in a normal real estate market. We're looking forward to being in one of those again one of these years. But you could make an offer on a home, and it would have a financing contingency, and it would have a sales contingency of your existing home. So you could ladle the offer you made with all of these contingencies. Well, that hasn't been the market for a long time, and so we get a lot of phone calls from mortgage brokers who say, I have a client, he needs to close, it's got to close by the end of next week or in 2 weeks, and I can't get him bank financing that quickly, but I will be able to bank finance him out very shortly thereafter. Can you make a bridge loan, which is normally what it's called in the business? And so we are very, very busy these days. In fact, in 2014, bridge loan has been our #1 product. It's been the most popular product, and so we have stellar people. In fact, listeners of the show will recall we told a story about one borrower who works for some little company by the name of Apple here in the Bay Area that couldn't get a loan to close quickly enough, and he was about to lose a $50,000 deposit that had gone non-refundable if he didn't close by Friday, and I got that loan request on a Tuesday. So we don't like those fast closes, but we'll do them when we can, and we've got the ability to do that more often than not. So.
Okay, so first of all, do you have a deal of the week? Anything exciting you're working on specifically?
I know our time is a little bit limited. We're running towards the end of the fourth segment here, and I'd really love to talk about the book that I wrote and is about to be published. And so in my business as a private money lender, I do actually work with a lot of real estate investors, and oftentimes real estate investors will call looking for 100% financing because they took a course that told them that they could still do no money down. Well, the reality, and oftentimes these guys would call and they'd say, hey Mark, could you introduce me to some of your private investors, some of the people that invest in your notes? Or they might say, how do I find my own private lenders? And so after getting that question, about 1,000 times and basically saying, well, I can't share with you my investors because A, I don't know you, and B, I'm not going to refer you and then have you have it be a disaster. So, so I decided, well, how could I share information with the real estate investing public that would help them to basically find their own private lenders, their own equity capital? And so I came up with a title of a book and wrote a book called The Insider's Guide to Attracting Private Money. And the essence of the book, and there's an accompanying video series that I also produced, which will be also released in the next 30 days, that talk about how to be attractive to people with money to invest. Because there is billions of dollars in the Bay Area alone looking for yield. And a lot of those people will invest in real estate if they can find the right people to invest with. The challenge with most people who call me on the phone and are looking for an equity partner or an investor, a cash investor, is that they haven't done the homework. They haven't created what's called a credibility package. And that's what I go into in great depth in both the book and the video series is what is a credibility package? How do you create one? What should it say? What should it look like?
So being more attractive is not just putting on high heels and more makeup. Okay. I just want to make sure I understood that correctly.
So I'm very big on attraction versus promotion. Attraction, we all know what promotion is. It's, hey, here I am, buy my stuff. Attraction is, here's what I can do for you. So part of becoming attractive to private money is presenting yourself like a real estate professional to someone with capital so that it gets them to know you, like you, and trust you. Because I tell you right now, after having been in real estate for almost 35 years and having raised millions and millions of dollars, people will not invest with you unless they know you, like you, and trust you. And so there are keys to being able to create that, and that's what I go over.
First impression, too.
Right, and absolutely. So the Insider's Guide to Attracting Private Money is going to help you become attractive to people with money to invest. And
When does the book come out, and how do people get hold of it?
we're launching it probably at this point in September. It's probably going to be sometime in October. We're still getting everything set up.
Okay, on future shows you can.
It'll be available on Kindle and downloadable, but right now you can sign up. We have a website called attractingprivatemoneybook.com. Go to attractingprivatemoneybook.com and sign up for the release.
Great. All right, Kelly Clemensen,
Yes.
Farmers Insurance. Thank you
Yes.
very much
Awesome.
for joining us.
Thank you
We're
very
going
much
to
for
cut to
inviting
our
me.
thoughts for the day here. The University of Minnesota is older than the state of Minnesota. How does that work? I don't get it. And 10 dimes, 4 quarters, and 2 half dollars have the same mass. What a coincidence. They each total up to $1. I thought that was kind of interesting. All right, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. 7 seconds to spare.